Yeah! CPI. We'll get going in like 3 minutes, huh? 2 minutes, I suppose. BRB. New coffee. Yeah! Turn me up, turn me up! Bass! 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 All right. I think that's a good segue. How you doing? Good morning, YouTube. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Good. A little close, huh? A little close. Huh? How do I back the camera up? Like, I want to be close to the mic so it sounds good, but I don't want to be like that. Anyways, does the green and burgundy work? I think it does. I think it does. Anyways, good morning. We have a little thing called CPI today. So earlier at traders.com, guess what we did? Oh, we looked at CPI? No, we looked at the 5-year forwards. All right, so where do you get that information? Oh, we got it from the Federal Reserve Economic Database. Huh. Well, hell's bells. That sounds smart. Yep. So now we can put the results of today's announcement into context. But let's, before we get, we're about 15 minutes away from the news, let's get an update on the recent headlines. This is our headlines radar. Mexican peso gains ground ahead of key U.S. CPI release. The Monetary Sentinel. Banxico is widely expected to lower its policy rate. Back on inflation watch as U.S. CPI is set to drop.
Euro offers no reaction to zoo sentiment data. Scotiabank. Canadian dollar trading defensively as wider yield spreads remain a drag. Scotiabank. U.S. dollar soft but holding on to recent gains ahead of inflation data. Scotiabank.
Oil prices rise after U.S.-China tariff deal. U.S. CPI on tap. South African jobless rate rises in Q1. Ukraine's Zelensky insists on face-to-face talks with Putin in Istanbul.
US dollar or yen steadies as BOJ stays hawkish amid US tariff uncertainty. Breakout above 148.50 eyed.
So you can just sit on this headline radar and listen to the news as you trade. We're 11 minutes away from the release of CPI. Okay. We're expected to get 2.8 again on the core. Okay, 2.4 on the headline, which obviously suggests oil is the reason that we're at 2.4 and not 2.8. Yeah, and so we looked at that also earlier today at traders.com. So YouTube, why don't you join traders.com? Under the new membership level, you get access to everything, even a rebate on your trading, a cash rebate on every trade you make. So just consider it this way: a smaller spread. Huh. Yeah, nice. Consider it 3% cash back. Yeah, you get paid cash. You can withdraw the money. You're like, that doesn't sound like a lot of money. Well, over the course of a year, it's legit. Hey, your credit card only gives you 2% cash back, and you love that credit card. Well, this is 50% better than that. So it is real money. It's a good deal, y'all. All y'all. Yeah. What's required for that? Well, you have to have a membership, you have to be breathing, and you have to have some money to open up a trading account. How much money? Whatever you want. Cool, huh? It's not a bad deal. Yeah. By the way, Jim, I'm going to bitch and complain today and see if I can break through, figure out what the is going on. All right. So what else is, should we do? Well, maybe you've already done this. Oh, we'll get to the bottom of it. Probably not today, but we'll figure out what the disconnect is. I believe it's just programming it incorrectly. All right. Boom. But since we have something that nobody else has, Jim, nobody over there knows what's going on. So that's part of, being unique and special. Yep. All right. So you probably already did this, but depending on what's likely to happen, do you think inflation will be less than expected? Do you think inflation will be more than expected? Or do you think it will come out as expected? What do you guys think? Okay. Yeah, well, Jim, it just shows you how unique the opportunity we have is. Yeah. So anyways, I'm not logged into YouTube in the proper normal fashion. I'm running the software, so I can't post a poll. So let me know what you think. Lower, higher, or as expected? We got 2 for lower. PMI says higher. Sure, you can use that sky killer. As expected. Now, ultimately, it doesn't actually matter. Okay, this is a news event. It presents you a scalp, maybe even a day trade if it's dramatic. But it's not likely to change the fundamentals, although it could, and we're in sensitive times where, you know, but if inflation has gone up last month because of a fear of inflation coming because of the tariffs, which are no longer coming, or at least not for the next 3 months, well, then I don't know, it's late. It's old data. So anyways, I don't know. Will it radically change the opinion of the Fed? Well, that's what we care about. Analyzing economic data helps you interpret and predict likely monetary policy by the central bank. News is just this volatility based on something that we don't know anything about. What's the number going to be? I don't know. Is it going to be surprising? What? You're going to trade based on something that's unexpected? You're like, yeah, Wayne, I like black swans. Okay. But that's certainly fine. Okay, so you do your analysis, but my point is that the goal here isn't to outsmart everybody and actually get it right. It's more like respond to the similarity or differences to the fundamental trend that's being played out in the market. This will just show you what's happened in the past. So if it comes out as expected, and let's say that's a high probability, okay, there's a scalp, but that's it. Here, there's a scalp spot day trade. Dollar gets strong here. Dollar gets strong. 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 And yen gets stronger. Okay, well, that's all we know. If it comes out as expected, in the past, almost always, not always, but almost always, dollar strengthens. So, most of you say less than. What's happened here? Aussie dollar, no scalp. Euro dollar, no scalp. Pound dollar, no scalp. Kiwi dollar, no scalp. USD CAD, no scalp. USD Swiss franc, no scalp. But the yen's win. Is that useful information? If it's greater than expected, dollar weakens, scalp. Dollar weakens, scalp. Dollar, no scalp against pound. Dollar weakens, scalp. No scalp. Dollar weakens, scalp, and scalp. So if it's less than, there's no trade, no scalp anyways. You'll have to go further out, like a 4-hour or 12-hour. Looks like 12 hours probably your most reliable. Okay, day trade. And not instantly after the news, most likely. Huh? We'll find out. And then, but if it's greater than, dollar weakens, and there's plenty of scalping opportunity. Well, it's just analysts, okay, trying to predict, which is kind of silly. but that's what they do. Very often, Abdullah, you find that their expectation is like the 3-month or 6-month average. And you're like, that's not even an expectation. That's just an average. Yeah. So why don't you just say that? Yeah. So, anyways. So that's why I'm like, well, it's only interesting if you're going to scalp it for a couple hours or even 45 minutes. The rest, I'm much more interested in the fundamental. Goldman Sachs now expects the ECB to reach terminal rate at 1.75% in July. Mexican peso gains ground ahead of key U.S. CPI release. Okay, we're down to just about a minute or so. It's a little more than a minute. We're looking at this number here. So, what did you learn? If it comes out, okay, if it comes out higher than 2.4, what's the trade? If it comes out 2.5 or higher, what's the trade? I just gave you years of data. Are you following along? Fifteen seconds. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Survey says 2.3 less than expected. Okay, 2.3 less than expected. Guess what? Wait, are you guys guessing or are you responding to the data that I just showed you? Okay, we said if it was higher, okay, dollar weakens. Dollar weakens, dollar weakens, dollar weakens, right? So, Steve, you're guessing. Richard, you're guessing. This is our data. Okay. If there's less than expected, which is the actual answer, no scalp, no scalp, no scalp, no scalp, no scalp. Yeah, there was a scalp on USD yen. So yen gets stronger. Okay. Okay. Stop guessing. What you say might make sense, but it's just not true. Okay. There's logic and then there's fact. That's all I know on that one, is that's what's happened in the past. And that's a fact, Jack, Steve, and Richard. Tisk, tisk, tisk. And so Sky Killer is like, which more important, higher or lower? Well, that's what we just reviewed in the past. So it's lower than expected in the past. What short-term impact did it have? None. None. Okay. You see? None. So continue mission. Now, there was a guy here yesterday on YouTube's live stream, and he gave me the question, Wayne, why does crypto act so different from Forex? And I'm like, what do you mean? Well, check this out. Yesterday's high was precisely 105,773.7. Okay. Precisely the same tool I would use in Forex. And then it dropped down to the daily 5 EMA, in which it held precisely. So this is another example to that person. I forget his or her name, but maybe that person subscribed and has come back. And I just want to point out, you should know that, and it behaved precisely as a Forex pair would, but it's crypto. So it's more like, oh, well, maybe you don't know this level of detail. Oh, okay, well, we can fix that. It's just information. It's just knowledge. That's why you go to university, right? Yeah. By the way, my niece just graduated from medical school. Oh, whoa. Congratulations to her. Medical school. She is so smart, but she's also a wonderful, kind, warm human being. Yeah. So let me make it even better. She graduated #1 in her class. Whoa! What? #1 in the class. Oh my God. Good for her. Yeah. Yeah. Just astounding. Good for her. She's going to kick ass. Huh? So anyways, there we are. Remember our target is, what is it, 122 or something? Yeah. Yeah, my dentist graduated #1 in his class. So, #2, I'm sorry. I'm looking for someone a little better. So anyways, yeah, true. He graduated top in his dental school. Euro yen. See if we can get to the next. Yeah, thank you guys. Yeah, good for her, right? Good for her. Yeah, but we knew that that was the likely outcome, Craig, right? That was part of our analysis. In the situation in which CPI is lower, the only trade was yen. The only short-term trade was yen. Yeah, interesting. And basically, what you do is you just continue mission, right? So, like that's why I looked at, like going back to euro yen here. Okay, what's our mission? Oh yeah, yeah. Well, we're heading up to 166. All right. Well, it didn't work out exactly as planned. So we could update this, but this is what our original plan was. We'll leave it there. And under that plan, as long as we can get above this R1, then we're going to head up to 166. Yeah. Well, that's the same as yesterday and the same as the day before, same as the day before that, and the same as the day before that. So now we're just going back to work. The news came out. Doesn't hurt us, doesn't help us. It's whatever. Go back to our daily plan. This is what shows you that if every day you don't know what you're doing and you open up your charts to look for something to do, what you've chosen to do is fail. Every day is not unique. Okay? If every day was unique, then there would be no such thing as a trend. Well, if there's no trend, then we don't need any economic data. And the central bank is just going to make decisions randomly. But I can't believe that you would assume that to be true. That all of this is just whimsical and random. Really? Wow. I think you should try finger painting or something. Really, everything's just random. Uh-huh. No, I don't believe that. Cool. So we're just, okay. So the general plan here is 161.43 predicts 167.45. So I could update this really. Let's do this. I guess I can do this because our original plan didn't work out the way we wanted. And that works out beautifully. Fibonacci works. Okay, and there you go. Okay. So that's the plan. It's the plan today. It's the plan tomorrow or yesterday, the day before, the day before, the day before. Okay. Even when we were up high, the plan was a pullback. A higher high predicts a higher low, which predicts a higher high. All right. So we should be at 167.5 by the end of May. That's called a plan. So how did today's CPI change today's plan? Okay. Alexio says, what my professor said it was, and he's smart. I missed the first part of the comment. What was? Otherwise, why would he be a professor? So I'm going to be a professor at Harvard. It's on my goal. I achieved my goals. So I am going to be an adjunct professor at Harvard. I'm going to teach economics, and I'm going to ask for no money. So the smartest professor you can get knows his crap and doesn't need money. Yeah. The other professors are probably smart too, but in a theoretical way. They've read all the books and they can tell you what all the other people think about economics. Yeah. Oh, market being random. Yeah. But there's no way that that's true, right, Alexio? Yeah. So I don't know if you're joking or if that's serious. But there's just no way that that's true. It just my favorite response to that, because I don't hear it very often because I'm in the finance world. Yeah, you're right. Yeah. I agree with you. But sometimes you do hear that, and it's not from professionals, it's from wealth managers who are generally failed accountants or people with sports marketing degrees that became your money manager, even though they don't know two hoots about finance or economics. Yet somehow they're qualified to manage your money. Whatever. So those knuckleheads, they'll tell me it's all a random walk, and there's no way to make any of this predictable. And I'm like, that is true. You cannot predict it, right? They say to me, you can't predict the future. And I'm like, you're correct. You can't. I can. I don't know the future, but I certainly can do analysis and make a logical, intelligent decision on probabilities. I might not know what the next card in the deck is, but I can tell you there's two more kings. What's the probability the next one's going to be a king? Well, less than it used to be. 50% less than when we started. But I don't know what the next card is, but I know there's only two kings left. So if I need to hit a king, right? And I'm like, and I don't know all the cards, so there's a good chance someone else is holding a king. So what's if I need another king to make it three of a kind to win the hand, what's the probability the next card is a king? Pretty freaking low. Yeah. So do I put my money in or do I fold? I play the probabilities. Yeah. So anyways, yeah. But let me tell you, I think the best professor is the one that doesn't need the money. And what are you learning from this person? Money. So Harvard is an important thing to me. In fact, I got my Harvard Crimson on. It's just if I can have a positive influence on young adults when it comes to money, it's a goal of mine, right? And I'm working with the Fed to change the curriculum of how economics is taught at universities. So now I can work with teachers, I can work with kids. I think that's a noble cause. I think people need to know more about money. And is it random, Alexio? Definitely not, right? Definitely not. Hey, kids, guess what? Everything that comes to your money and finance and economics and monetary policy and the stock market and the bond market, guess what? It's all random, so therefore none of it matters. Just don't worry about it. Like, what kind of knucklehead believes that? Now, of course, I'm opinionated, right? You're like, Wayne, I believe that. How dare you? Well, I'm clearly articulating my beliefs. And if you believe something different, that's fine. But based on what our beliefs are, it's you interpret the data, whether it's technical analysis or fundamental analysis, and then you make decisions. So it's really the decision-making process. But if you can't predict it, then you don't do any analysis. If it's unpredictable, then all analysis is worthless. Okay? It's like a die with 36 sides. But at least you got 1/36 of a chance of getting it right. But if it was random, so now it'd be like a die with 1 million sides. You know what that looks like? A bowling ball. What number is it going to land on? Dude, impossible. 1,000,000 to 1 to get it right. It's mathematically impossible. So therefore, why do any? Why would you guess? Why would you try to why would you apply logic to something that is completely random? It makes no sense, does it? So you might as well just give up. You might as well just capitulate. You might as well just, lock yourself in the basement with Grandpa Joe, hide it out because the sky might be falling. Cower in the dark. You're like, Wayne, that's another step too far. I'm just trying to appeal to your subconscious. So if I just pissed you off, you'll probably remember what I said right before that. And if you found that funny as heck, you probably will remember what I just said. So appealing to your emotional, not just your intellectual, but your emotional self is important if I'm going to be a teacher. This is why on my first day of being a professor, I'm going to storm into the room. I'm going to slam my book down, and the whole room's going to go quiet. And I'll say, stand up! And everybody stands up, and I say, look to your left, look to your right. One of those people I'm going to fail. It's going to be great. I'll even practice in the mirror. And then, of course, I'll back down, but they'll remember it. They're like, oh, dude, this guy is a loose cannon. Yeah. All right. Where are we? 8:49. Very nice. Very nice. Very nice. Okay. We have the bottom of that range and the top of that range. And if you concur, you're going to trigger snowflakes. I don't even know what that means. Oh, maybe I'm a cold-hearted snake. I'm so cold I trigger snowflakes. I've never heard that expression, but it's funny. How about this? At the end of the class, I'm going to roll a die. It says A, B, C, D, or F. 5-sided die. And that's your grade. A random walk down Massachusetts Avenue. If that was random, would you study? Would you do the homework? Would you write the papers? See, it just doesn't make sense to me. Humanity wouldn't be doing the stock market or the futures market or the currency market or the bond market. If it was all random, we wouldn't be doing it because there would be nothing to achieve. It would be pointless. So I just don't understand. And then how do you give that person that wrote the book a Nobel Prize in economics? I don't understand. That makes no sense. If it was random, then there would be no point. And if there was no point, we wouldn't be doing it for the last few hundred years. Longer than that, if you go back to like China and Japan hedging rice futures, right? Or in Europe, I think the first known, I forget the guy's name, but he went to have his grapes pressed into wine, and he couldn't do it because all the grape presses had already been reserved, and the demand for the presses were so high that if you wanted to press your grapes, because everyone had their grapes at the same time, right? Harvest is at the same time. So most of the time, the grape presses are not even being used. But the one time this guy wanted to use the grape presses to make his wine, well, everybody wants it. So the prices were ridiculously high. Now, it was cheaper later in the season, but maybe half your grapes had spoiled, right? It was cheaper before peak harvest, but most people, your grapes were not sweet enough. But this guy decided, you know what? I'll pay for next year this year. So he went to the grape press guy and he's like, okay, I'm not going to get a prime spot this year, but I'll tell you what, I'll pay you for next year right now. Right now, I'll pay for the prime time next year. I'll give you the cash today, but give me a good price. Because you'll have cash in hand guaranteed. You're already paid. Even if I have no grapes, you keep the money. See, doesn't that make sense? It's not random. And then what? Everybody else figures out what he's doing, paying a year in advance. And all of a sudden now they're all writing futures contracts. And now you're planting the type of grapes that are going to be harvested at the best futures price for future pressing. So if the best future price is earlier in the year or later in the year, then you'll find grapes that will harvest earlier or later in the year. And now you're planting in the ground based on the price at harvest time. And now everything you do is totally logical. But if it was random, then you wouldn't do any of this logic. I would not want to live in a world where everything was random. Mm-hmm. So you're like, wait. So the United States, well, how about we'll go further? The U.S. dollar last week tanked, Treasury yields spiked, and Taiwanese currency jumped 5%. 5 days later, the United States does a deal with China, reducing tariffs by 115%. Right? 3 days later, the United States is in Saudi Arabia. And at the exact same time, Putin and Zelensky are going to meet in Turkey. And you think all of this is random? Really? All these different things are just randomly happening. Wow, that must be frightening. Of course it's not random, right? So anywho, the thing is, if you can do the analysis, if you can uncover the data and do the analysis and think forward, you were able to do, utilize this in this case to maybe it's to protect yourself or your family or to make money or prevent the prevention of losing money, but you should be able to connect the dots, right? So we have a little bit of a challenge here and then another one here, but what's the target? 6435. Now, if you attended my annual outlook back in January, I gave 3 outcomes. One of the outcomes was tariffs, no Fed cuts. Okay, how many people were there for that? Where I said, let me tell you the scenario of the White House creates tariffs and the Fed does not cut interest rates at all. Now, the Fed was projected to do 3 cuts in January. I said, well, I'm going to make a prediction of Trump does do hikes, but there is no cut. There are no cuts by the Fed. None. So we suggested M3. Okay. This drops to 5,000, which is the monthly support. And then we go to a top of that, which is 6,435. Is that how you remember it? Okay. If you don't remember it, then it didn't happen. And guess what? I still think that. So I bought that and I bought the Dow too. Yeah. Denise says yes, that's how she remembers it. Okay, so what do you want to do with euro dollar? You going to buy it? But Wayne, it's been falling. Uh-huh. So are you going to buy it? Okay. What do you think? Are you going to buy it? What do you tend to do? Is that a higher high to you? Okay. This is just straight up basics. None of us know the future. That is true. I do not know the future. But we have rules of engagement using technical analysis. Okay. Based on a higher high, what is the rule of engagement? A higher high predicts what? What does a higher high predict? Higher low. What does a higher low predict? So is that what's going to happen? I don't know. Okay, so those are weekly candles. So we go back to daily, and we did come down and tickle it. Could it be up now? Well, it's a reasonable price. It's okay. It's moderate. It's a reasonable price to consider. You might want to put on monthly and weekly and daily pivot points. I guess we could just do that. Okay. We are on the monthly M2. If M2 is the bottom, what does that predict? Okay, so I'll put this together. In your mind, you're thinking this might be a buy opportunity just based on price action. But if pivot points, if that ends up being the bottom, it predicts M2 to M4. Are you into it yet? Okay. Let's zoom in to the 4 hour. tried that before. So I'll just change the template then. We will now go to weekly. Okay. What does this say? This says, let me read the chart for you. If this is bearish, and it is bearish on the 4 hour, okay, you can see it's been bearish for a while. Okay. This wick is showing the top of this week being the central pivot. That predicts 111.09.3 as the bottom. We hit that on Monday. What does that predict? The next move, now it could be this way or just straight back, but back to the central. It might take a day. It might take 5 days. But that's what it says, isn't it? Are you guys reading it the same? Well, the only way you could think that is if you were out on the daily and the weekly and you recognized that you believe this is supported, which means it's falling and you're already a bull. Do I buy now? No. Do I buy now? No. Do I buy now? Yes. Okay, and you want to get into this trade. Okay, not buying the dip because it's a dip, but at least now you're dropping in. You're like, anything bullish is good to go. Of course, it's risky. Every trade you make is risky. Caitlin, that's exactly right. Okay. But at the same time, money is flowing. Okay. And we want to track the capital. Now, I'm just doing technical analysis as well. Like, I don't care that this is euro dollar or not. Okay. So if the stock market is going up, typically dollar weakens. That's the typical process. Now, is this year a little different, and could tariffs change it, or the threat of tariffs, or the change of tariffs? Yes, 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 yes. But what is normal if we're risk on? Normal is sell dollar, sell yen. So you'll either get something like this on euro dollar going up, or euro yen going up. So now you would have to choose. What I'm teaching is just basic price action and technical analysis on multiple time frames. Now, if you are a bull, and here's the Caitlin, the reason having a bias is important, because what you said is exactly true. But despite all of that, if you are a bull and it does this, you walk away. No, logic, Richard. Logic. Prices going up and down tells me money flow. Okay. All right. Like, for example, Treasury yields spike in a matter of hours. At the same time, the value of the Taiwanese currency spikes. What happened? Okay. Do I use a volume indicator for that? Who cares? Okay. A volume indicator will tell you people made a decision and have now done something. But wouldn't you want to understand why they're making a decision? That's right, Richard, right? So you would assume that Taiwanese investors sold their treasuries. When the price of treasuries fall, the yield rises. So we know somebody sold treasuries. Now, was it all kinds of people all around the world? Well, it's really hard to tell. But at the exact same moment, the Taiwanese currency jumped 5% in hours, not days or weeks, hours, right as yields were spiking in the United States. They jumped more in that morning than they typically move in 2 weeks. So somebody sold treasuries. Now, when you sell treasuries, you get dollars. So selling treasuries doesn't change the value of the dollar. But if you sell your dollar and convert it to a Taiwanese currency, then the Taiwanese currency gains value and the US dollar loses value. Guess what happened to the US dollar that day? It lost value. A reasonably bad day for the value of the US dollar. So now we have 3 narratives. 4, really. The price of treasuries tanked because somebody was selling hard. Therefore, yields spiked unusually high, very unusually high. Then the dollar weakened. So somebody was selling the dollar. Well, where did that money go? And Taiwan's currency spiked 5% in hours. Oh, that's what I'm talking about, Richard. A volume indicator? No. Follow the money? Yes. Okay? You see what I'm talking about? Oh my God, it's so beautiful, isn't it? Yeah. Follow the money. You guys having fun? It's good, right? Oh! So the question is, was that random? Was it Taiwanese finding out that Trump was going to give Taiwan to China as part of the negotiations? And the Taiwanese found out, freaked out, and decided they need to have cash in case they have to sneak out in the middle of the night? Maybe. Or was it China, through their connections with Taiwan, sell off their treasuries as a warning to Trump days before they met in Switzerland to talk about negotiating? Was it China walking in to the meeting room carrying a big stick and say, hey, by the way, we can dump $1 trillion worth of your debt with the snap of our fingers? What you gonna do about it, tariff boy? Okay. I don't know. I can't prove that. But is it random? Of course it's not random. Oh, well, you couldn't predict it. Okay. Well, it's not random. But if you don't understand, you're like, oh my God, that's just random. I don't understand. It's totally unpredictable and it's just random. Nobody, right? That makes no sense. It's just crazy out there. Well, I guess if you don't know, you don't know. And if you don't know, it seems random. Okay? So on the shield, the Harvard shield, it says Veritas. It's the truth through knowledge. And it's what makes you, illuminate. You are illuminated by knowledge, and most people walk through a world of darkness. So for many people, it will seem random. Your job and what I'm doing here is sharing. I want you to know. I want you to be illuminate. I want you to be able to connect the dots. Because if you can connect the dots, you have a chance to invest wisely. Well, Caitlin, how long are they institutional, right? How long are they? But and then the next thing is is there a piece of data that's even more important than that? Are they 50, are they 60-40? Are they 90-10? Okay. And then tell me the piece of information that may be even more important than that. Okay. So I just want to point out as well, TRADARS has quantitatively put us long the yens weeks ago. Weeks ago. Like, so are they long or are they less long? The Japanese yen. See, Caitlin? So let me show you how easy that is if you have the data. That's so easy. Okay. Very long. Yeah. Okay. Yeah. Yeah. No, not this week. There's 3 times more bears in Japanese yen this week than there are bulls. So you're right. The capital stock, okay? The capital stock is very long yen. But those positions are being sold off. A 15% week over week increase in selling. Oh, snap. What do you think, Caitlin? Mic drop. Done. Boop, 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 boop. Boop, 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 boop. Yeah. Yeah. Oh my God, this is so good. You guys like trading and investing? I love trading and investing. Your neighbor wants to talk football all day, every day. I want to talk money and markets and finance and economics and international political economics all day, every day. Alexio's like, dude, I think I'm too long. Well, what are you trading? Are you making it up? Are you trading old data? This is what's happening right now. You were told this on Friday, Alexio. How come you don't know? Maybe it's time to thin the herd. Call the yen. Cull, not call. Cull. Cull. Cool, right? But at least you know. That's the whole thing. At least you know. Golly, how wonderful is this, right? Now let's compare it to retail. Okay, let's compare it to retail. Let's see. Um, I I can do it manually. Get rid of oil. Get rid of czar. Get rid of that. Sorry, clunky. I know. At least I can do this and manipulate the data. Don't you guys just love the fact that this is a live database? You can manipulate it any way you see fit to make your informed decision. Loaded question. I know. went fizzled out on me. Doesn't seem right. Ah! Gold, dang it! So I'm just wondering why it went faded on me. So I just want to do it again. I know it took a long. Need some. Yeah, and then now it fizzles. Is it Aussie? Aussie does it for some reason. Interesting. We don't have pound yen. Pound. Yeah, the Aussie does it for some reason. Kiwi. We'll live Aussie yen vicariously through Kiwi. All right. Okay. 45.55 long USD yen. 40% are long pound yen. 37% are long euro yen. Kiwi and CAD and assumingly Aussie would not be the first ones you'd go long. Okay. Euro yen, pound yen, and dollar yen would be the first ones if you were evaluating as yen weakens from heavily long to short. Which ones are you going to? So you want to measure all of this. So you might want to watch this. Okay. I'm working on that, Steve. They're all from different databases. That's a whole different government agency. But it is on the wish list, not necessarily to-do list, but definitely wish list. I've recently had conversations about it. How about that, Steve? Yeah. Yeah, I don't think I own it anymore, but I started a website called Epicenter Energy. Yeah, but that was about 2 years ago. Yeah. Mm. I don't even know if I still own it. I think that was the name. Epicenter. No, I don't. Epicenter. No, I don't think I own it. Oh, maybe I do own it. Maybe I'm selling it. So what I like about entrepreneurialism is right now Epicenter is worth $100. I think I bought it for $7. Now it's worth $100. Okay. Now, if I spend a few $1,000s and I build an oil, an energy complex database, the value of Epicenter.energy goes up even further. if I can generate an income stream, the value of epicenter energy goes up even more. But at one point, it was worthless. The $7 is just to cover the fees that put you out on the internet, but no one's really making money or much money, you know. The value of the company was the service to give you the .energy top level domain. So really, you paid $7, but it's worth nothing. You just paid someone to turn the machine on. Okay, great. But I could turn it into a $1 million company. That's what I like about entrepreneurialism. Love it. So I might actually have this and create that value whenever I want to have focus on it. Yeah. Cool. Love it. Entrepreneurs are great. Capital plus labor. Right now, I've put some capital into it. The thing is, do I want to do the labor or do I want to hire the labor? Well, that's going to require capital if I hire. So now I put in my capital and then add more capital to put in other person's labor to create value. And then I need to convert all those expenses into a revenue so I can have other people gain the value and share the expense. So now people have value that never existed before. And somebody might say, oh my God, this is the site I'm looking for. Steve's like, oh my God, look at all this Brent data. It's beautiful. And it's got great colors and it's informative and it's live. And oh my God, this is the thing I've been looking for my whole life. But I won't pay $10 a month for it. Right? So anyways, entrepreneurs create value and make the world a better place. I love entrepreneurialism. I like trading. I like investing. I hope you decide to be part of the TRADARS community. Stock market is opening. You should probably check your implied vol. Oops. And you would say, are you a bull or a bear today? Okay. Are you a bull or a bear today at the stock market? And if so, if you're trading the S&P, what's the implied volatility? Well, a few hours ago, you should have known that being a buyer down here, do this. Okay. You should know or have known that your buy zone was in here if you were a bull. Okay. Your stop. Let's do this in red. Would have been just below here. Why? Because if you're correct on direction, based on what the S&P 500 has done this time of day on this day of the week, it'd be very unusual for it to fall that far. Probability. You probably won't lose that trade today. It might take you 2 days to lose it, but then again, now you're wrong on direction. So you wouldn't want to be long. What are the current subscription models? There's only one subscription, and it gives you access to everything. Now, you can upgrade it so that you're part of the prop firm and you get some love and rebates and all that kind of stuff, but not required. So everybody gets everything. All right. So 1, 2, 3, 4, 5, 6 hours ago, you would have been a buyer. Why? You decided to be a bull on the stock market. Why? Maybe the recent fundamentals. Okay. Good. So that's your plan for today. In the next 24 hours, you plan on taking it all the way to 5,950. All right. Is it going to go straight there? Of course not. So how does trading work? Oh, well, now you need to know how to be a trader. Well, let's say we go to the 4-hour implied high, which is probably the London close, which is the U.S. lunch. And then we drag this across. Okay, you ready for it? So we get there, London closes, we fizzle, then right around the New York close, we take it up. And by London open, we're here tomorrow. Okay. So maybe at the U.S. close, you move your stop to break even. I guess break even would be here. Okay. And now you're in this for a day, a week, or a month, whatever. Well, that just shows you that doesn't incorporate the volatility, right? So yes, if you're at resistance, okay, Osamu, you're going to say, well, not today. You're a bear. Why? Oh, you believe you've hit target, right? You've hit targets. All right, well, then let's plan that. Then at the open, okay, this is your sell zone. Okay. And you want to take it down. And if you're right that we're going to have a capitulation day, it's very unlikely in the next 24 hours that we're going to go higher than that. So you would think down at least to the roll reversal, right? At least to the bottom of the chart. Now, maybe tomorrow is like this. Well, then you were wrong on the reversal. But if you're correct, then we are going this way over the next day or two. Okay? Now, we don't know which one is correct. I'm not suggesting you should know what's correct. I'm suggesting you should know what your intent is today. So if you look at it and say, well, we've hit the weekly targets, there's going to be profit taking. Yeah, it'll probably pop up and then come down. And if you're right, you'll get paid, but you don't know if you're right. And for those that already bought because they're bulls and they're trading it, because remember, what I teach is fundamentals can overwhelm technicals. I went over that Monday morning. I guess that was yesterday. Maybe even Sunday night. Yeah, I might have said it Sunday night, but definitely Monday morning. I said, look, if it's a fundamental move, it's going to supersede your technicals. They're like, tariffs were dropped from 145% down to 30%. And there's going to be a tsunami of orders from the United States to China to get products here by Christmas. And everybody needs to order everything, and the factories in China are going to spike. Well, that means the dollar weakens. That means China expands. That means the flow of capital expands. That means American companies are going to have relief. American retailers are going to make profit at the end of the year around Halloween, Thanksgiving, Christmas period. Yeah, okay. What else does it mean? It means China is going to need iron ore and coal from Australia. But see, I've already talked about this till I'm blue in the face. Everybody at TRADARS already knows this stuff. So if you're AKA just a YouTuber, you need to move over to the community. So like this should be basic stuff. Basic. Okay? So if we have sort of a down day, don't be shocked if the rest of the week looks like that the rest of the month. And yes, this is a take profit zone on a daily or a weekly or a monthly pivot, but dude, what matters most? Your pivot? What percentage of the market? Don't think Forex traders. Think hedge fund. Think corporate treasury departments. Think about governments and agencies. Think about banks just moving money around, corporations moving money around. Well, what are the corporations doing? They're selling the dollar to buy Chinese currency to place orders so that they can have products on the shelves in December. So, what matters most? Your pivot? You think Target's chief financial officer that was sweating bullets that they will not have products on the shelves and that revenue was going to drop by 75% this Christmas versus last Christmas, suddenly has an opportunity to buy a product? You're like, dude, you think they're worried about your pivot point? They don't see your pivot point, and if they did, they wouldn't give a damn. They are in the business of buying crap from China and selling it to you with a 300% markup. And they want to do that. They're frothing at the mouth. They desperately want to move capital this way. So this is where I'm like, oh, but what about the moving average? What about the moving average? How about the moving money? Follow the money. You see what I mean? So fundamentals, okay? And fundamentals are simply business logic, which I love. So can you see the people at Target freaking out? Okay? Well, just imagine the CFO and whoever's in charge of buying all the products and stuff like that. And let's say they met in January for a board meeting. And they presented to their board of directors that Trump is bluffing. He's nothing but hot air. That he will not do tariffs. That it's all a big threat. It's all bark, no bite. So no, we do not need to order a bunch of inventory to hedge the risk of Trump actually doing a tariff. We decide as your executive team that we're going to recommend to the board doing nothing is the best course of action. How do you think they feel the day that Trump raises tariffs, to 145%? And they told the board Trump is full of hot air and that he's not going to do a 25% tariff, that he's bluffing. So they're right. It wasn't 25, it was 145. Oh my God. That's to a point where the board is going to fire the CEO, the CFO, the chief product, whoever manages the inventory. Those people are on the hook, right? Are you following my logic, everybody? So the board says, okay, we're going to meet in May and do our next board meeting. And we need to know a plan, right? So what's the plan now that tariffs are 30%, which is way higher than what they thought the bluff of 25 would be? That they have 90 days that this will be 30%, not 145. Okay, 90 days. What's the likelihood the CEO, the CFO, and whoever buys all the inventory for the shelves just says, oh my God, we've been saved. And just buys as much as they possibly can. They place orders for September back to school. They place orders for October Halloween. They place orders for November's Thanksgiving. They place orders for December's Christmas. And they're doing it now as much as they possibly can. Yeah, well, then Aussie dollar goes up too. Why? Well, all this crap that's going to be made in China is going to need all kinds of raw material. And even though China has lots of raw material, imagine every company in the United States alone just sees this as a gasp of air when they thought they were drowning. They're going to buy as much as they possibly can. The factories are going to work double time, double shift, triple shift, 24 hours a day. Money is raining out of the sky from the United States. Every factory is at capacity. Oh, well, they're going to need iron ore and coal and plastic. And so, commodity currencies are going to probably do really well. Dollar's going to weaken. Okay. Hong Kong stock market goes up. Okay. We avoided disaster in the United States. Stock market goes up. Dollar weakens. We already did that. And what about pound and euro? Great British pound and euro. I don't know. Less impactful, huh? But are you thinking this way?